Okay. Okay, everybody. Good to have you with us here. I'm Jim, the option professor. A little background on myself. I'm a graduate of Boston College, and I went to the Options Institute for Advanced Option Trading a long time ago. And over the years, I've done, I would say hundreds and hundreds and hundreds of seminars to many thousands of investors nationwide, both in person at the hotels where everybody used to go to the hotels, and now, of course, with the webinars themselves. So I've been in the option business my entire life. I certainly know how they work, and I certainly have traded thousands upon thousands of contracts and millions of dollars worth of stock. So this is not my first rodeo by any means. As far as education is concerned, I've always started my whole foundation of my business always with education, because you want to make sure you know what you're doing. You want to make sure you know the use and the risk of everything you're doing. You want to make sure your risk tolerance and your suitability is in line, and then basically proceed from there. But what I'm going to do today is I am going to go over the markets. We are going to be talking about what we think might happen next year. And I am going to go over Bitcoin. And I'm going to be going over at the end how I can help you. And basically, I can help you in two ways, but I'll get into more details later. To educate you and to help you become a better trader and to develop yourself as a trader, whether you're just starting out or experienced. And again, we have ideas that we send out that we think have merit. So between education and ideas, we can hit both of them. And we do our best to help you be the best trader you can be. Okay, so let's start out with what's happening. We got two stocks that we got to talk about right out of the bat. One is Nvidia, although this looks like a much ado about nothing so far, because they came out with their numbers. And their numbers are great, obviously. I mean, you saw what their end users were spending, so obviously they've got good numbers. But I think they're starting to look at the train slowing down a little bit, maybe. You know what I mean? Year over year is a blowout, right? I mean, see, they're going to be awesome. In fact, somebody was telling me in 2021 or something, they only had $3 billion worth of annual revenue or something crazy. And then the number now is just astronomical. So this is a great company. There's no denying it. But there is obviously a maturation process to everything. So what do I think they're honing in on to, because it's basically a yawn? I think they're honing into the quarter over quarter growth. I mean, year over year, forget about that. That's 12 months ago. I don't know how relevant year over year is. Quarter over quarter, I'm going to be looking at that, right? So that was 17%. Certainly not a bad number, but maybe not up to the snuff of people's expectations. The other thing is margins. Their margins, I think, used to be up in the 77% area, if not even more. And now our margins are coming in at about 73. Certainly fabulous, unbelievable. But again, this stuff is already priced up pretty good. And again, people, they want to see fireworks every time these guys talk. Now, the head guy is saying there is massive demand for the Blackwells. But obviously that's not a known fact yet. So, and things can change, but that's the come line bet. If the Blackwell comes off and knocks the cover off the ball, then we're talking what, 160, 180. But obviously things can change and people's appetite can change. In other words, as these companies keep loading up on all the AI stuff, if they're not getting the ROI, return on investment, they may take a pause and see what they can do with what they got. Or if people come up with alternative methods to the NVIDIA way, that might, at a discount, that might be attractive to the small medium business that doesn't have a ton of money like Microsoft or Meta to throw indiscriminate amounts of money around. So there are obviously some things that are being considered now. And what we're seeing here is not a buy the rumor, sell the fact by any means, but we are saying that whatever came out didn't get everybody too excited. They do have good forward guidance. Q4 guidance is for 37.5 billion. So that's another jump. But for whatever reason, at least at this point in time, tomorrow's another day, they look like they didn't light it up as much as people wanted. And I'm just zeroing in on the two things that I would say might be their cause, and that is their quarter over quarter growth of 17%, and their margins are dropping just a little bit. But when you're priced to perfection here, dropping a little bit of margins is not going to make you go to 170. All right. So anyway, that's the story. And of course, here's the other thing, because I do options, right? Let me explain something about options. When people tell me they're discounting a 10% move up and a 10% move down, which means a strangle or a straddle might cost you, $30. Okay. Well, I mean, everyone who's buying that, somebody's got to be selling it, right? And who's going to short options into an NVIDIA's print? Not too many people. So you probably got market makers doing that kind of stuff, right? So the market makers made the prices like $30, 15 aside. And obviously it's down $3. So what do you think those premiums are going to do with those zero to expiration and the ones that expire Friday? I mean, they're going to collapse. Who's going to keep the money? The guy who made the market, right? So again, I'm always a believer that big price things, you always got to say to yourself, who's on the other side here? And is he smarter than me? Well, the guy took in 30 points of premium, right? And now you're trying to dance with him at a $3 move. That dance isn't going to go well. You're going to be stepping on each other's feet. So the bottom line is that that was the first thing that told me that maybe they're getting a little too excited. Uh, Same thing with the stock market, or China, or any of these stocks that or stock markets that jump up dramatically. My view after all these decades is this is an order imbalance, and an order imbalance doesn't last forever. In other words, after Trump won, everyone was running in there like crazy time, spending, buying, covering shorts, covering hedges, get me in, get me in. Who do you think was selling into that? Obviously, it wasn't the local public. It's probably obviously the market makers, because obviously everyone was on the buy side. So they brought the market up to 60-50 on the S&P, and we haven't seen 60-50 since, because again, a order imbalance doesn't last. Once the imbalance is satisfied, you got to find new people who want to come in at 60-50 after they could have bought it at 5,400 a month ago or 5,600 a month ago, and that line might not be around the block. And then you get a pull back to 5,850, which we just got. So basically, my experience helps me know that, take a breath. There's a buyer and a seller. Who's got the good deal going here? And if you're starting to buy the S&P at 60-50, where you could have bought it at 5,600 a week or two ago or whatever, you're not exactly getting the best price, are you? Right. Or if China has been in the doldrums and FXI has been trading at 26 and 24 and 27, and it goes up to almost $40 because they might do some stimulus. Obviously, that's an order imbalance. BABA goes up to $140. Used to be like 80. That's an order imbalance. Order imbalances don't last. Why? Because once they're satisfied, you got to find new people. You can't find new people. It falls under its own weight. So, that's what can happen. Same thing happened with Super Micro, really. Everybody in the world sold out of that thing. Who do you think was buying at $18? The public? Market makers. And what happened after they came out and said BDO is their new guy? Bam. Nice little rally, right? So be careful to get too much in with the crowd, because they do say cattle get slaughtered at some point. So you got to be careful. Okay, so that was my 2 cents on what's going on right now. And oh no, I forgot to tell you the other one. Hold on. How about Snowflake? I own Snowflake. I like it. I'll show you why. Just recently, it was a good buy recently. Real easy, real easy. Let me show you the methodology here. Okay, this is a 20-year graph. What's the RSI say down here? 30, 27. What's it say over here? 33, 39. That's called a divergence. That tells you the selling's done. Okay, now we're talking about the 5-year. Where are you over here? Where are you over here? 36, and then over here you're at 44. Kind of a divergence, and it's turned up. It's above the red line. Next one is 1 year. And here, clearly it turned up. So here you got all these lows down here. Well, what's this one? This one's at 32. Everything after that was what? A higher RSI. Tells you it's run out of steam. So once it starts getting above the red line, bam, you take your shot. You like the shot you took? Well, it's up $25 in the aftermarket at $150. So taking your shot wasn't a bad idea. You want to take a shot up here? You do it by yourself. I'm not interested in it up here. I was interested in it down here. Because if you buy it down here, you can get out if you're wrong. If you buy it up here and you get out, you're going to lose a lot of money. So the bottom line is that's how I try to analyze stocks, by using the trends and using my moving averages as destinations, and using the relative strength to tell me whether the car's engine is strong, whether the car engine is accelerating to the upside, whether the car engine is weak, or whether the car engine is losing steam and you're going to need a valve job, if not a new engine. That's how I play. And basically, because I'm only interested in really 2 things. I want to know what the trend is, and I want to know what the speed of the car is. And those are the 2 things that I like. So basically that's it on Snowflake, and just a good example on why I was bullish on it. Okay, and again, of course, if it's bullish and I got a earnings report, then you play ball. I mean, come on, now you know you got a match, right? In other words, you're going to need something to stimulate it to go to 150. Well, it's not because the CEO bought a new car, right? It's going to be because they came out with some numbers, or they're doing some things and they're saying they're righting the ship. I mean, this darn thing has been what, from 230 down to 110. Do you think they're doing something to correct that? Let's hope so, right? I mean, I assume companies, when they go to work and their stock is way down, what they're doing at work is trying to fix it, right? So when things go way down, I don't want to get bearish. I want to see when these guys are going to start fixing it. Obviously, they started to fix it. All right. All right. Let me go give you a rundown on what's cooking here locally here with the markets. Then we'll start talking about 2025. But how about a little here and now? All right. Let me show you. Got to put the right symbol in, Jim, or it won't work. Okay. ESZ. I always start in the back of the end zone, and I move to midfield. Okay. So here's the deal. I start out at 20 years, and what's 20 years telling me? It's telling me that this thing is very extended over the last time, and the RSI is not really that much different. So you're at 74 here, right? 74, and we're up here at what? 72. So, hey, it's strong, no doubt about it, but it's certainly not, blowing out the old highs on the RSI. Let's look at and the main thing is 9 miles away from its moving averages on the long term. In fact, I'm going to put a different one up so you can get better prices. This is the cash, SPX. The futures contract sometimes gets goofed up. I wanted to illustrate this clearly to you because it's part of my 2025 story. Okay, there you go on the 20-year, much more graphic on what I'm trying to explain to you. This is called a high price, and this is where land is. Land is now at 52.45. Dry land down here at 4,700 and change, and driest land is around 4,600. That's a lot of real estate between 60-50 in here, right? Now, I don't know that it's not going to 6,500 first, but I know at some point it's going to revert to the mean. And when it does, and you're caught in a rainstorm, you're not going to be very happy. So using options to replace positions is probably going to be a good idea, or collar strategies, both of which I'm clearly familiar with. Now, let's talk about bring it closer in. Okay, again, beautiful trend. You buy it against the line. When it comes down to 5,200, that's where you hit it, not up here. You got to hit it when it's time to buy. Right here, you had a chance, 5,400. Right here, you had a chance. Right here, 4,900. So the bottom line is it's in a beautiful uptrend, but it does look like the RSI is a little bit weak, doesn't it? A little bit. But I'm not. Hey, listen, there's no huge sell here. I'll show you why. RSI weakening is only one sign. If I don't have anything pointing down, in other words, if this red line's not pointing down, it ain't going down. Okay. So just because you have a divergence, like, here you had 76, and then up here you're at 61, that's a divergence up here. And so bottom line is, boom, it pulls back. And again, my attractors are where I'm thinking it's going. I'm not guessing. This is where I think it's going. I didn't make it up. This is a numerical fact. I mean, that's the number. It's not a numerical fact that's going down there. It's a numerical fact that is a line that may go down and get tested. Okay, same thing with green, blue, and red, and gold and purple. All right. So anyway, right now, like I say, if you had to, had to do anything, it came down, tried to fill the gap, didn't do it all the way. So it really could go down to 5,800 and fill the gap. But right now, if this thing started getting back above 59.33, this thing could obviously take off. Actually, I think it really wants to get above 59.50. That would be my best number, 59.50, and I'll show you where I get that from. Because 59.50 on its way to 60.50 is better than 59.17 on its way to 58.17 in my view. Yeah, so you see, you'd want it to get above these numbers here. Everything's underneath blue. So when it's underneath blue, now this is why it's in a traffic jam. It's going to break one way or the other for sure. Because here you got the support at 58.60, and you got some resistance here around 59.40. And when it makes its decision, it should go. But if you notice, if it's really going to run, everything's pointing up. Everything's pointing up. It goes from down, then when it breaks up, then it all points up. We don't really have red pointing up. We don't have green pointing up. We don't have blue pointing up. So if this thing were to break down to 5,800, it wouldn't surprise me in the least. But I wouldn't fight the tape. This thing goes 59.40, 59.60. I wouldn't fight that tape, that's for sure. But I wouldn't be walking around whistling in the wind like the put call ratios telling me. Somebody was on TV saying the put call ratios at some kind of historic low. Complacency couldn't be more prevalent if it was COVID. I mean, it's like all over the place. So that's the story on the stock market, on the S&P. There you go, right? If right now, get above 59.40, 59.60, you might be back on the bicycle. And yeah, and what was that red line there? 59.33. So, 59.40, 59.60, you get a little steam going. These lines start pointing up. You could accelerate. RSI looks like it's hanging on for dear life here at 56, but if it goes to 60, and then once it goes through 60, if it goes to 70 or 80, you're going to be at 6,300 by the end of the year. So, I'm a very flexible guy. If you're not, you're going to get run over. So the bottom line is that right now, it looks like a neutral deal looking for direction. Where would direction come from? Under 58.60, under 5,800, and above 59.40, 59.60. That's my view. Let's look at the QQQs. All right, what are you doing on QQQ? Let's see. Always start with the long-term deal. Long-term deal, obviously all-time highs. 72 on the RSI, 77 on the RSI. Interesting. A little bit of a divergence. Here you got the RSI at 73. Over here you got it at 60. I don't like that. But I'm not getting negative until the red line starts turning down a little bit, at least on one of these charts. And I don't know if I got that. So let's go take a look. Because, running out of steam is one thing. You know how you correct an RSI divergence? You go up 20%. And all of a sudden the RSI is making new highs and there's no divergence. That's why I like to use I like to use both fists. Otherwise, if you only use one fist, you're going to get hit in the face, right? So if I have two fists, what's my two fists? I want to know what that RSI is doing, but I also want to know what that trend's doing. And believe me, the trend's important. More important than RSI, because an RSI without a trend is not anything. Okay, so again, it looks like the same story, right? And you'd imagine it would be as the S&P. It's in a window, right? And again, it's hit support. I mean, if you're buying it, this is the line you're buying it against. If the line's rising and they do this kind of a deal, just consider those the market makers trying to grab your stock and then running it up. So as long as the things are running up, I wouldn't react too much to a little bit of a break of the. In fact, I don't react to these kind of stuff. In fact, it makes me want to buy more. Because if they do this and then they put it back above, then I know what they did. They ran some stops, they grabbed these people's money, and now they're running out of town with their money. So the bottom line is again, so far it's been kind of clean. It's always nice when it holds the average and plays nice. This is called not playing nice. And notice they don't play nice right before it goes from 480 to 520 almost. Yeah. So if it's going to go way up, they'll probably not play nice. So if this thing's going to 520, maybe they'll break this thing first and then take it up. Who knows? Anyway, all this cynicism all after decades of doing this, right? Okay, so let's look at the 1 month. And on the 1 month, you are looking at, pretty much like the other one. It's got red line turned up a little bit. Nothing to write home about. It held the purple. That's very important. Believe me. If it breaks under 490 and everything else starts going, we're going to get a substantial drop. This thing did fill the gap pretty much. Not all the way, pretty much. And then it has a gap above. So this is kind of an island deal. We'll have to see how it goes. Yeah, it's a big island when you think about it. You see there's an island all over here. So maybe it'll come up here to 508 and try to fill that, right? And then we'll see what it's made out of. Because if it goes up to 508, but the blue line doesn't turn up, that could be a great place to look for a sell. Because it wouldn't surprise me if they were up there, filled this thing at 508, blue line never turns up on the 1 month. And then the next thing you know, it's back under blue. And then the next thing, it's going through a full correction. I'll be watching for that for sure. But right now, it's, like I say, it's got some resistance right here at the 504 area. It's got some more resistance where blue is, and blue's up there at 507. And it's got a gap to fill. So I would imagine it's attracted to that area, and it wouldn't shock me if it went up there first. When it got up there, I would look at it like a hawk, and I'd say, okay, you did what you should do, which is fill the gap and make a little run. But are you going to keep going now, or is that go to 510 and then the next day it's at 506 and 505? And if that's the case, the sell side might look pretty good. And then of course over here, where would it have to get under to get to a decent sell? Underneath 496. So again, and then where does it have to get above here? It has to get above, where are you here? Yeah, 506, 507. So, that's the neighborhood. You can see where the neighborhood is. If it gets through that neighborhood, you're at 520. Year-end rally, blah, 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 right? That very much could happen. But like I say, and that's the direction it's pointing. So I would be, more leaning to the upside until I got more things pointing down. Okay. All right. Let me take a quick look at your small caps. Everyone's pounding the table on small caps. I was too at 205 and 210, but at 230. Well, now, no, again, yeah, on the pullback, yeah, this is the time you want to take a bite of the apple. This is the neighborhood. Yeah. Not up here. You get it? Here, you see 220? Yeah. You see down here 210? You see where it's on my purple line? Very interested. You see it at 215, hugging the blue? Very interested. 220, hugging the blue? Very interested. Again, a classic case of break the moving average, get the stops, blue line never turned down, and bam, you made the biggest move of the year almost, right? So again, when they penetrate my averages and the average doesn't turn down, then they get back above it, I know that that's probably one of the best times to take a shot. Now here they came down to fill the gap, which they've almost done, but haven't done. And so basically, again, all the markets, and this thing's hugging here. So it's going to make a decision. If you're interested in this thing, you want it above 225. On a 1 month basis, again, it's all the same. These markets they only go at different speeds. They all go at different speeds. That's all. So the bottom line is this thing's hanging in there as long as it stays. And there's your purple. So remember I said 225? And where's that top of this thing? The top of this thing's 224. So to fill this gap, go down here 224, 225 should be the maximum would drop. Gold is right here. So there's all your support zone right in that neighborhood. And then your resistance you can see right ahead of you. So if we start breaking 232 and 234, it's not back on the bicycle. And how far can it go? Well, it hadn't hit the all-time high yet, has it? Or it just barely did? There you go. Back in 21. And I love this. You see what I mean? They take it to a new high for like what, 1 day? And then the next thing is they bring it in the biggest decline you've ever seen. So, run the stops, get short, get the market maker short, and then bam. Anyway, so yeah, it looks like a nice uptrend now. 5-year graph, again, you buy it against the line here, you're getting in at good prices, right? You want to buy it up at 240, not so good. What did I say? 225 would be a number. 224. Well, how about 222, 224, 225? If you give me the right neighborhood, that's all I ask, and that would be the right neighborhood if it's going to continue to be strong. But there is a net underneath. You can see there's other moving averages that could catch it, and it is in an uptrend. So I'm certainly not bearish on IWM. In fact, it's one of my better long-term plays if things are going to work as people think. All right, so let's I want to get to some other stuff, but I want to go over a couple of different markets real quick. I know you guys are into the gold. We had that pretty much tagged pretty well. Buy it at 25.50 on the pullback. That was the call there, and I'll show you why. That's why right there. Okay, so basically that was the call, and it was a good one. And again, up here we had 67, and then we had 72, and then we had 58, and that was the time to say sayonara to the gold. Once it dropped under 27.50, I had my trend down, so I want no part of gold after it dropped under 27.50. On the monthly graph, over here you were at 70, and then up here you're at 70, and then you're in the 63s, and then the line turns down. So there it's even at 27.80 getting sell signals on the short term. Also on the upside, again, I saw on the long term 25.50, right? And then on my shorter term 25.60. So I had confirming signals, and that makes for a strong call. All right, let's talk about crude oil. Let's not be crude, but let's talk about some crude. Here we go. All right, on crude oil. What are you looking at here? All right, crude oil. Well, I always look at the long term first. Let me show you the long term. This thing's in a big, tight range here, right? It's holding the purple. So 60 is a floor right now, and the ceiling's at 80. So it's going back and forth. And the lower ceiling comes in at around 76, 75. 82 is really where the big floor is. Look, ever goes through 82, you're talking about $100 crude. The RSI looks like it's holding on for dear life. One thing I do like is you see all these RSIs here, they're above 40. That's a good thing. That's a good thing. In other words, if that was 32, 35, that would be very bad. So bottom line is, from the RSI point of view, it's possible that those are the lows. It's possible. And of course, if it breaks the bottom, there's nothing underneath it. You want to talk about sayonara or the word timber? I mean, come on, what's going to hold it down here? The air? So, I mean, this thing is, this is a big thing. And again, if we're drill, baby, drill, right? And if we are got China can't get out of its own way because they keep bailing out their municipalities and not putting any money in their citizens' pockets to make demand go up, then their demand might not come around. And so low China demand, and OPEC wants to increase production in December, and Trump wants to drill every oil field that he can find in Texas and North Dakota. Then the supplies could really spike, and then you could be talking at an oil price like he was talking on the campaign trail, big drop in gas prices. Well, you know how it happens. They bust crude, they oversupply, you get a good job at the pump, and the oil companies get whacked. Pretty much that's it. And it's on the ledge, but it's been on the ledge all year. It's really, well, not all year, but it's been on there since when? When did it go on the ledge? It went on the ledge here in September. So it's been on there. Well, actually, it's when it started here, probably been on there for 6 months or 4 to 6 months, right? I don't think the longer it stays there, the less likely it's going to move. And the red line is pointing down here. So like I say, but here's the RSI again. Check it out. 36. What is it over here? 43. You see what I'm saying? A lot of people are negative on energy. I am what they call nervously positive, waiting for my red lines to turn up because I see the RSI is not collapsing, which means if it was a fighter, the fighter still has legs. I just need to have him throw a couple of punches to show that he's alive. You understand? So everyone's counting this fighter out. And I'm saying not so fast, as Lee on College Football Day would say. Not so fast. Now let's look at the 1 year, because this is going to be a very, very interesting thing to be in. If these oil shares are way down. Baker Hughes went up really nice today. Anyway, so here's your 1 year on oil. 35 down here, 49 over here, 45 over here. See, it's holding 40. Not bad, not great. And the lines don't look great, and everything's under purple. So obviously, if somebody told me oil's going to 50 or 40 bucks a barrel, I'm not fighting them. I'm just saying that the RSI has not collapsed yet, which is really a weak argument, because that's the only thing I can say positive right now, is that the relative strength hasn't shown that it's given up. And that's because it hasn't broken 60. If it breaks 60, I'm sure you're going to break 40 on the RSI, and it's going to go into the abyss, possibly, I would imagine. So anyway, that's the story on crude. Crude, you're really now, where do you need it to get going to look like it might be turning up? Well, obviously, this is the neighborhood why it's stopping, right? Can you see why it's stopping here? And this thing looks like it might come right back down again. But blue has turned up, which is not a negative. So again, getting above this gold would be lovely. And that is at about 70 bucks. Let's call it 70 bucks. Let's not pinch quarters here. So get above 70, 69.50, 70, right? Now it's cool. Yeah, let's call it more like 70. Get above 7, because there's resistance here. You see these lows? See these lows? That's resistance now. So if you get above 70 and start saying 71, 72, that would take the short term up, and that would be nice. And then on the 1 year, again, I say get above 70, 71, would get above blue. And then clearly getting above 74 would open the door. But it's got to stay above 74. It can't be one of these deals. That's why I tell you, when these lines are pointing down and they do some kind of a baloney rally, I'm not biting. You know why I'm not biting? Because the trend's down and this ain't going to last. Something must have occurred here. I don't know exactly what it was. Maybe it was that. Yeah, I think it was that Japan carry trade. Yeah, that it is. There's you remember that carry trade that took the stock market down to 5,100 on the S&P? Well, they thought the world was coming to an end or whatever they thought, and they ran the oil up to 77. Well, the carry trade was an order imbalance, right? How long did it last at 5,100? Not very. And this obviously is an order imbalance. Doesn't go from 66 to 77 because Johnny Lunchbucket's buying. So the bottom line is an order imbalance. What I tell you about order imbalances, they don't last. And who do you think was selling at 77? John Q. Public or the market makers? So go figure. Anyway, that's the story on crude. And I'm going to go over two more things and then I'm going to get into what I do. So let's talk about interest rates. I had this one handled pretty good too. I was on the Stan Druckenmiller train, and he was the one getting bearish on bonds when they came out with the 50-point cut. Let me show you why. Okay, on the 10-year. There we go. Always look at the long term or else you're going to miss things. You're going to miss something. I'll show you what you missed. You missed the fact that 350 was going to be the low of yield. You understand? That's the yield. So interest rates went from 5% on the 10-year down to 350. Everybody thought, oh, God, buy every bond you got. These interest rates are going to collapse. I'm talking 2.5% on the Fed funds in 6 months. The Fed's going to be cutting 12 times. And that's before lunch. Well, that clearly wasn't true, was it? Now, how would I have known it wasn't true? Because I look at the graphs from all different time zones, and I've been doing it for decades, okay? And I'm not going to be overwhelmed by the news one way or the other. So when it comes down here and the loud chorus is buy bonds, rates are going to tank for the rest of the year, and I see it's hitting the blue line, I say to myself, not so fast. And so if you shorted bonds at this time, you've made very good money. On a shorter term basis, again, I'm a big one on 4%. If it gets under 4%, I'll start biting the argument of lower rates. Absolutely. But that's not what's happening right this second. Now it could, but that's not what's happening right now. And the Fed's supposed to cut in December. It's very interesting. The environment they think is conducive to cutting rates. 4% unemployment. The average unemployment rate going back to World War II or something is like 5.6%. 4% is a little bit low. Wages obviously are increasing. Retail sales are going great. The stock market's at 6,000. Houses are at $1 million a square foot, and they think it's time to ease money and credit. Go figure. Actually, what they're really trying to do is really come back into market lines. The 2-year note is basically what they try to align with. And that's trading at around, I guess, 4.25. So that's why they're going to take the Fed funds down here to 4.5 or something, whatever. And then they'll be in line. And then after they're in line, we'll have to see what Trump's policies will do. If it's going to be inflationary, the rates will go back up. If it's going to be, deflationary, then maybe the rates come back down. And of course, if unemployment starts going 5 or 6% for whatever reason, rates will definitely be coming down from the standpoint of the Fed does not want a recession. They don't even want a soft landing. These guys want nothing. This is ever since they discovered QE in 2008, they live in there will be no pain in this world. Meaning, if we have any kind of a blip, look what they did with COVID. They printed a 27% increase in the money supply, and then they brought the Fed balance sheet from 4 trillion to 9 trillion. And then they wonder why we had some inflation. So the bottom line is that these guys have definitely shown their hand. They have no appetite for any kind of unpleasantries, which obviously is one of the reasons why Bitcoin's going nuts, which I'll get into right after this. Okay, so there you go. So what's the story on it? I give you the number, 4%, 424%. Stays above that, the risk is to the upside. That's how I see it. Okay, what about that US dollar? The US dollar. I've been pretty good on this too. I'll show you why. Look at the long-term graph. Okay, you see when things go up like this, right? They're going to revert to the mean, revert to the mean. Okay, so when it's up like this, I'm not looking for a place to buy. I'm looking for a place to sell. And when it comes back to the mean, then I'm looking for a place to buy. And that's why I thought 100 was a lovely place to buy. And that's why it's worked out well. Okay, down here, look at this. You understand? No, this is called a confirming indicator. It's hitting my gold line at 100. That's another thing saying that's a good deal down there. Now, this is not a great deal up here short term because of what? Because it's extended. But again, if you look at the longer term graphs, that's a breakout. And if it's, if it wants to accelerate to the upside, where's the RSI at 56? So if this RSI gets to 63, you're going to be at 110, and then you might be going to test the highs because there is momentum now. And when all my averages meet like this, something big generally happens. I can show you one last thing on that so you understand what I'm talking about. You want to talk about something big that happened? I'll show you something big that happened. It's called the S&P 500 in October of 2023. You see October of 2023? You see all these averages are meeting around here, maybe even better on the 5-year graph. There you go. There you go. There you go. You see everything's meeting here? That's called a meeting of the minds. And when the meetings of the minds happened, it takes a very big move out of there. So that's why I'm saying on the dollar index, you could very well be looking at a situation where it can go a lot further. And if our rates are going to 5% yields or better when everyone else is cutting rates around the world and our economy is 10 times better, doesn't the dollar deserve to be a lot higher, even though our deficits and our national debt is a joke? So anyway, that's the story on the dollar. Okay, here's Bitcoin, because we were very good on Bitcoin too, because we're following the charts. Bitcoin 5-year graph. You see another traffic jam? Did I tell you about traffic jams? Right around here. So what did I tell people? Don't buy here, don't buy here, don't buy here, don't buy here. But when it goes here, shoot it. Shoot the ball. Shoot the ball. Goes up here, a little too late. A little too late. If you do anything up here, and I wouldn't suggest anything because it's so extended, but I'll tell you the story on it. And I have a report when people sign up for my 3-month deal. They get a report on Bitcoin, which gives you 14 different stocks that could benefit from Bitcoin. Obviously, some of them, I've already put in my letter. Microsoft, we had Microsoft MicroStrategy in my letter as a long-term play at 145, Coinbase at 150. So this is no surprise to me. I guess the story is this on Bitcoin, long and short. They have halving every 4 years, right? 2012, 2016, 2020, and 2024. Historically, which that's all it means, historically, after the split, according to what I've heard and read, Bitcoin tends to go up 300% within 12 to 18 months of the event. Okay. Well, if history is going to repeat itself, which is a big if, but if it, and obviously it looks like it's starting to repeat itself, but I don't know if it's going to continue. But we came out about 50 grand when it did the halving. So 50 times 3 would be 150 grand. We're at 94. Certainly it's showing that it's almost doubled since then. So, if you wanted to play this thing, there's no way I would do it other than in a limited risk option, because if this thing is wrong and it goes down, this thing can go down and shake the dentures right out of your mouth, because this is a very volatile market. I mean, look at this stuff in 2021. Goes from 70 grand all the way down to 15 grand. You see in 2024, that's freaking this year, it went from 75 grand down to 50 grand. It's up here at 100 grand. If it's going to 150, you're home free. So if you have your options and your option spreads in there, then you're all set. Or if you buy some of these stocks that haven't moved that much, like MicroStrategy, maybe you play a nice game of catch up with the ones that support it. There's companies that do things like that people don't really watch. They do the data centers and they do the energy, the supporting stuff for these companies. And by supporting them, obviously there's ways to make money there. And so some of the stocks that are in this report that I give out do that kind of thing. And they're not anywhere near like a MicroStrategy or a Coinbase, which is a very expensive company. So anyway, that's my feeling on Bitcoin. The other feeling is that on a longer term basis, so like I say, if you did want to buy some of these type of stocks and just hold them for 5 years, it's possible that Bitcoin has a very bright future. Why? Because Mr. Trump is in bed, obviously, with Musk. And you think Musk is going to be negative on Bitcoin? In fact, he's got Trump talking about a strategic national reserve or something with Bitcoin in it. And then guys like BlackRock, they want to make money. And if people want to get into this stuff, they already created your IBIT, right? And all these other ETFs. So they're giving you the vehicle. You want to come in and play, come on and play. And so there are going to be more and more of that. And of course, when things perform like that, money goes to where to seeks the alpha, right? And just to give you an idea, right now, Bitcoin's not a standard part of anybody's portfolio as far as the generally thought of. You've got stocks, you got bonds, you got real estate, you got commodities, right? You got alternative investments. Well, there's about $400 trillion or $450 trillion, who knows, running around in global assets. You take 2% of that and put it into Bitcoin, the market cap is going to go from like 1.7 up to 8 trillion or something like that. So if this thing becomes more and more incorporated, and again, Trump's in there, he's a deregulating guy. He's going to hear, oh, we got rules against that. Get rid of those rules, and Musk will be probably promoting that. So the bottom line is that with less regulation, which has really been an impediment to getting this thing going mainstream as much, you could have a very bright future. And some of these 14 stocks I have might be very interesting for you to know about. So I'm very happy to be able to extend that to you. All right. We are now at a point where I've got to tell you what I can do for you, and hopefully we can do some business. I have a alert service, options alert service. Okay. And basically what I tried to do when I put this together with Trading Indicators, Daniel Sinig, if you guys have been listening to these broadcasts, Daniel has been on it as well. Very sharp German man living in Montreal. And he and myself, he and I guess, we put together this options alert service, and we did it from the angle of people need two things. And I've been doing the seminars for how many decades? I know people show up all the time, whether it was 1990 or 2000 or 2000. People who come in, they need education. They need to know what the heck they're doing, right? So I said, the first thing we got to do, Daniel, is we got to have education. So we set out and we spent a lot of time putting together a options master class, which is basically 3 sessions, 6 hours of options. Now, like I say, I mean, I was in the options industry my whole life. I went to the Options Institute. I've traded thousands and thousands. I mean, I know how they work. So basically, I put my knowledge and experience on there. Daniel did as well. And we put 3 sessions together, and we go over as much as we can, and pretty much very comprehensive, obviously, over 6 hours. And so when you sign up for my 3-month deal, you get that absolutely free. If you bought it from us standalone, it's $397. So it's a $397 deal for signing up. Not in addition to the Bitcoin report as well, don't forget. So those 2 freebies go right out to you. Okay. And then if you have any questions on the masterclass, you can talk to the guy who's actually on the thing directly. Okay. So the second thing you get on the 3-month deal is you get ideas, because what's the other thing people want to hear after they know more about options? They'd like to have some ideas to consider and maybe play with or watch or do or whatever. So, I specialize because here's the deal. When I was writing the options, when I got in trouble, in other words, writing options, obviously way out of the money, they go to zero most of the time. I think we know that, right? But when you get in trouble is when the option premiums get small and there's a news event, and if your window is too tight. So when you do a strangle, you have a higher strike and a higher call and a lower put. That's why they call it a strangle. I'll give you a real world instance. On August 25th, we put on the alert, IBM. And we said the idea was to buy a 202 call and a 190 put with about a month out. And the premium was $278. So the guy who sold that window, wasn't that little of a window, 10 points, 202 and 190, he got 278 bucks. That's the most he could have ever made. And he had to wait a month to get to, for the premiums to totally be at zero, possibly, because time had to run out, right? Well, IBM at that time had already gone from 176 to 190. So it proved to me it was on the move. And the charts told me it was on the move. So I said, the seller's got a bad deal here. I think the buy side's got the good deal. Then what happens is, in this case, not always, IBM kept running all the way up to 217. So you're in this thing for 278 bucks, maximum risk, the most you could have ever lost. Stock goes to 217. Well, we have a chart here. Why do we put it into reality? I'll show you it right now. It's a lot easier to see it when it's in front of your face, right? So let's take a look. Okay, because again, it was at the end of August, so you'll see what I was talking. This is again, yeah. So now you'll see a little bit of my methodology here. Okay. Okay, so where are we at the end of August? We're here, right? We're right here. What's the all-time high? Right here at around 200, right? And look at that trend. You don't think that's an established trend? Come on. Now, you're at 193 or whatever, right? 194. Okay, so I go a month out and I say it's going to get above 200, 202. And I'll put insurance on it 190 just in case it gives me a big drop. Now, some people don't buy the insurance. You don't have to buy the insurance. And if you didn't buy the insurance, your return would even be bigger in this case. But if you did buy both sides, it was 278. And then basically you can see what happened then. Bam, 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 bam. And it expired on September 20. So by September 17th, it was trading at 218. 202 minus 218 is 16 bucks in the money. And that's why we do what we do. Okay, so that's an example of a strangle from that month. So again, you get the options masterclass. That's going to get you educated. That's going to get you familiar with the options and get you going. Then you get some ideas like on the strangles. This last month, we've had strangles and things like United Airlines. United Airlines 65-55 call combination would have put for 375, went to 90 bucks or something like that. Like I say, when we lose on these things, we only lose the premium. When you win as much as the market can stand or as long as you can hold it. Now, there are ways of coming in and out of the options. We discussed that in the master class, and I can talk to you directly about my opinion on how to get out of things. Okay, because a lot of people know how to get into things. They have no idea really what they're trying to do. Abject guessing is a strategy. Hope is a strategy. And then there's other tangible things you can do as well that I can discuss with you because I've been doing them for a long time. So that's the first thing you get as far as ideas. You get some strangles. Now, what about, and let me just show you, the UAL thing. Because again, when you're wrong, you lose the premium. And when you're right, like in this case, you get paid. You get paid. Okay. And this thing's still at 94. At any rate, so that's the idea. We're looking for strangles where the options are pretty cheap, where we think something's going to happen. If we lose, we're going to lose the premium. And if we win, we're going to try to ride the horse as far as possible. All right. Other thing is be some call spreads. If the premiums are big on something and I want to do a longer term option, I might do a call spread or a put spread to obviously reduce the cost of buying the call. Classic case was MicroStrategy. Those options have been ridiculously priced forever. So obviously I did spreads on those, but I did like $40 spreads. And if you put up a $10 and you can make 40, is that a bad deal? It's not a bad deal, right? So, or $10 to make 30, that's not going to be bad, right? And then we've got long-term plays. Everything I do is limited risk. Okay, I'm not interested in writing naked options or doing some kind of a iron condor, behind the back pass, butterfly this. I'm not interested in that. I want to be having, I'd like to have as much as, of course, on the spreads, it's capped gain, but I'd like an unlimited potential gain as much as I can, because again, this is risk capital. So we're trying to make some money and we don't have unlimited risk capital. So we're trying to keep our outlay at a reasonable amount so we can play for a very long time, possibly. Okay. That's the idea behind the whole concept here. So, and diversified, you notice that United Airlines has nothing to do with IBM. And to read off some of the other ones in the last 3 months, it has nothing to do with the Bank of America. It has nothing to do with Lyft. It doesn't have anything to do with SoundHound. It doesn't have anything to do with Intel. We did a few months back. You know, it doesn't have anything to do with Alcoa, Alibaba, Las Vegas Sands, Comico. These are all different companies. Affirm, Google, Schlumberger, Chipotle. So the bottom line is we like diversification as well. So you're going to get the class, you're going to get the ideas every Sunday night in your inbox, and then you're going to get long-term plays. I look at the markets and I say, what's going to be going on in the future 6 or 12 months out? And if I can feel good about something, like I did Palantir at $31, I'm going to say, go out till next December, or go out to next September, or next June. Like if you're doing anything with, what do you call it, with Bitcoin, don't you have to go to June? Because June would be when the 12 to 18 months run out on that 12 to 18 months after halving run. So you certainly would want to encompass June, because that's when that period would end. You'd feel pretty stupid if you bought a February option and then in May it goes up to that 150 price and everything's going nuts and you're gone. So we try to use our common sense around here. We try to see if we can use our expiration date to encompass when the event will happen. We're not always going to be right, but we're going to do our best to be right. And then, so basically you get long-term plays as well. I like doing long and short-term plays, because if your long-term plays work out and for whatever reason the short-term didn't work out, it can offset risk-wise as well, possibly. So it's helpful that way too. So that's the story. And you probably want to know how much all this wonderful information costs. Well, I'm going to get into that right now. You get the options masterclass, 6 hours, 3 sessions for free, $397 value. You get the ideas on the strangles every Sunday night in your inbox. You get some spreads possibly. You get key levels. I go over key levels on the S&P, QQQ, and IWM, and you get long-term plays that I think might be effective. Right now, I also did something with Citigroup for next September. It's supposed to be deregulation, right? It's supposed to be a lot of mergers and acquisition. Shouldn't hurt Citigroup. So there could be value there. That's the kind of stuff I'm looking out for. So you get those as well. Long-term plays, strangles, education, technical analysis, and it's a 3-month deal. And it also includes coaching. Coaching means you get a coaching period with me, and you can spread it out. You don't have to use it all at one time. And you can ask me all your questions, and you can have anything you need to know about options. And if you're just starting out, I go very slow. If you're more experienced, I go at your pace. And this only costs $297. So there's going to be a link that David's going to put up. And I'm going to try to tell you why I think now is the time to do it. And of course, that sounds like a salesy thing, but it's not. So let me show you why. Because if you don't do it, my life will go on. Here's the deal. This is the VIX. Okay. And oh, by the way, what's going to happen in 2025? It's very possible we're going to have a reversion to the mean. Why are we going to have a reversion to the mean? Because look at the VIX. The VIX clearly is above the red line here that comes in at 15. It went to 14 and change. Remember how I told you like to bring it underneath the lines? And when they bring it under the lines and then they put it back above the lines, that's sometimes a prelude to something very big happening. I believe between now and March, something very big is going to happen with the stock market. And I'd probably be well before March. But at any rate, I do believe there'll be a reversion. Now, there's no evidence of it right this second. Remember I told you. But when it starts happening, I'm not going to have a faraway look in my eye. I'm going to be ready to go. So you see, just finally, if the VIX is going to break, if it's going to hold 15, and if it ever breaks up 20, 25, you're going to get a substantial run up in the VIX. And if you get a substantial run up in the VIX, so you see you're down here at 15, if you're at 17 today, if you go above here in the next few months, it's going to be accelerating to the upside in my view. And if it does that, we'll have a big volatile market. And these strangles that I'm looking into, I'm hoping will benefit from that volatility. So the end of the calendar year, the beginning of the new year tends to be a very volatile period. If you were ever going to pony up a lousy $297, get 3 months of alerts, get an educational course for 6 hours in 3 sessions, and be able to talk to a guy who's been doing it for decades, this is the time to do it. So I hope you've learned something today. I certainly gave you 110% of my information as I could. And I certainly hope you join up because, again, I'm here to help people, not hurt people. And so, if you're out there trading, I find it hard to believe I couldn't help you. And again, when you're a customer, you're a friend. So if a friend calls up, you obviously try to help them. So, David, if you put that link up there, I certainly would like to encourage everybody to get started because, again, timing is everything in this world, right? And I think the timing for strangles couldn't be better from the standpoint of the VIX. The VIX just went down to 14, so the premiums are down. A lot of these sectors have not moved with the rest of the market. So a lot of these sectors are down in price. And I think volatility is staring us in the face within the next 30, 60, 90, 120 days, which means the future looks pretty bright for this type of tactic, in my view. Bare bones minimum, you're going to get educated on options. And I think most everyone could use a little bit of a brusher up on this stuff. So that's about all I can say. It's the top of the hour. David's going to give me the hook. So before he gives me the hook, I'm going to give him the hook. And I'm going to turn it back over to David. Thanks, everybody, for being here. I hope you had a great week listening to everybody. And I hope you guys join up here today so I can talk to you personally. Have a good